The FHA was created in 1934 in response to the rampant number of home loan defaults that occurred in the post-Depression era. The FHA's goal is to insure mortgages against the risk of borrowers defaulting on their repayments. Loans must meet the FHA's underwriting guidelines and be approved by the organization, with the buyer being responsible for paying the mortgage insurance premiums to the FHA. It's been a popular type of loan since its inception. If you're looking for the FHA to insure your loan, you'll need to meet the following requirements. You must have a steady employment history for the last 2 years, a valid Social Security number, a minimum down payment of 3.5%. The home must be your primary residence. The home must be appraised by an FHA-approved appraiser and the property be approved by the FHA. Your debt to income must be less than 43% of your gross income, including your new mortgage. You must have a minimum credit score of 580 for a DSLD FHA mortgage. These are typical requirements and are not set in stone. In many instances, there are exceptions to any of the criteria mentioned, so be sure to ask. Aside from interest, the costs associated with an FHA-insured loan are in the form of insurance premiums. There are two: upfront mortgage insurance, or MIP. This is an upfront premium in which the buyer will pay 1.75% of the loan, regardless of credit score. This amount can be financed and rolled into the mortgage. Annual mortgage insurance. This is your typical premium and is charged monthly. It is based on the borrower's loan-to-value ratio, loan amount, and length of the loan. Drawbacks and benefits of FHA mortgages. The drawbacks include having 2 insurance payments, one upfront and one monthly. Paperwork can be frustrating. FHA requires lots of timely and accurate paperwork and may require submitting it more than once. Some find that the loan limits can be a negative attribute. Mortgage limits are set by area, and there is a maximum loan amount for every area. If you need more than required, you may be out of luck. Lastly, another drawback might be the fact that most of your initial payments go towards insurance and not principal, which builds equity slower than a conventional loan. Benefits of FHA-backed loans include a low down payment as small as 3.5%. It's also good if you have low or bad credit. Even if you have undergone bankruptcy or been foreclosed upon, you may still qualify for an FHA loan. Lastly, FHA allows home sellers, builders, and lenders to pay some of the borrower's closing costs, such as an appraisal, credit report, or title expenses. So if you're lucky enough to have someone offer this, know it's okay with the FHA. So if you think a FHA loan may be right for you, contact DSLD Mortgage today to get started. If not, don't worry. There's an array of other lending options available. Watch our additional videos for details on RD, conventional, and VA loans.